Welcome back. Now, in the last couple of months, we all have observed the way commodity prices have been going higher, leading to even at the consumer end, the appliances company being forced to take price hikes. Appliances is the focus area, consumer durables, and my colleague Priyanka has gathered that this trend may very well continue. Priyanka, what's your gathering?
Well, yes, a third round of price hikes is going to be undertaken by home appliance manufacturers in the month of April, mainly driven by the high raw material prices. Prices of raw materials like steel, copper have really spiked in the past year, and that is driving home appliance manufacturers to take these multiple rounds of price hikes. What we are picking up from sources is that the price hike quantum will be in the range of 4 to 5% across all home appliances, and this is after 12 to 15% of price hikes have already been taken in the month of January and in the month of February. So that is the reason, and we are also understanding that not just the high raw material prices, but there's also an availability issue that manufacturers are facing when it comes to raw materials. That is also driving up the prices. Now, when it comes to the demand scenario, the industry does not really expect the demand to be impacted despite the price hikes. And the reason for that is summer is setting in, so that will drive up, the demand for cooling appliances. At the same time, people are going back to work from home. So the entire trend of wanting to upgrade your home appliances will come back. People who have been thinking since a long time to upgrade their appliances are likely to do so. But in the states where there is a lockdown, the business is definitely going to be affected. So states like Maharashtra, which makes up...
Right, thanks very much for that. Let's focus and analyze the RBI commentary on the ARC space. R.K. Bansal, MD and CEO of Edelweiss ARC is here with us. Mr. Bansal, how did you really analyze the commentary coming in for ARCs from RBI Governor this time around?
So basically, RBI statement talks of constituting a committee to look into the issues of ARCs. Because the ARC Association and ARC industry has been requesting RBI earlier, and ARCs have gone through a lot of changes in the industry. So let me explain slightly. Let's say when ARC industry started, it was a pure fee-based business model. Then RBI introduced 5% investment norm. Then August 14 it became 15% investment norms. So typically what happens is banks sell their assets to ARCs, 15% is invested by ARC, 85% is held by the bank as security receipt. It's something sort of like junk bond. And then ARC works on this and realizes, but then IBC came in the meantime in 2016. Also, RBI changed the provisioning rules for banks. So as per the present rule, if banks sell to ARC under SR structure, RBI says that you have to continue to make provision as if it is NP in your own books. So that has caused some lack of motivation is less for banks to sell to ARCs under this structure. Banks have been trying to sell more in cash, which then ARCs find it difficult because they are constrained by the resources. So I think all these issues, availability of resources to ARCs, provisioning norms, and whether we allow the AIFs and other funds to invest directly in the assets, which was a draft paper issued by RBI about 1 year back. My idea is that perhaps this committee will look into all these issues. It's one good thing.
Right. Mr. Bansal, running short of time, one more reaction I wanted from you. The way RBI Governor this time commentary led to softening of yields, or even rupees actually on the lower side since that commentary has come in. You've been a veteran banker yourself and now of course head of the ARC. On the macro side, how do you see that end of the market absorb the commentary and what's playing out?
I think overall the policy was very clear that RBI wants to have a slightly softer regime, and then growth. Despite the second wave of COVID, I think growth projections are quite good. So keeping that in view, I feel this temporary impact of COVID, etc. should go down and the economy should do well. And markets will be able to take this in stride.
Right. All right, Mr. Bansal, we'll let you go. I'm really sorry, completely running out of time, but thanks very much for your reactions coming in. With that, it's a wrap on the show. Thanks very much for watching. Goodbye.